The market has closed out for another day, and we have got to take a look at to see what is coming our way in the next day. And I'll tell you what, between QQQ and IWM, the NASDAQ 100 and the Russell 2000 ETFs, I think there's a lot to be excited about. Some things that make me very curious as to what tomorrow brings. And then don't forget, we also have CPI coming out tomorrow as well. That can also be very telling for what we could get from this. Today, I managed to scrape out 17% profit just off the small recovery that we got with QQQ through an options play that I made. Those buys and sells, by the way, available over at the Discord, link in the description. Code word cash if you want to check it out. Join the community of thousands of members. There's other traders in there, expert panelists, Stockmo, you name it. You can find us all in one place, and it's the best community that I've ever had a chance to be part of, with the most the best amount of products and services that more than I could have ever even dreamed of. The trading tools that are over there, the charting tools that are over there, the AI features that are also available. Come on over and see what the excitement's all about. Guys, with that said, let's get into the charts on this, and I'll share with you exactly the things that I'm watching at, oh my goodness, that I'm looking for, that I'm watching in this market. So let me pop this up here for you. We'll kick things off with SPY. So SPY, what am I looking at for today? Trading volumes, they've still been above the 20-day average for trading volume. So we're getting above average volume as the market absolutely melts down from its peak. So when we look at SPY, we peaked out up here and peak to trough down about 10%. So hitting that correction amount of about 10%, and then closed today about 9.35% down from the peak that we had. Let me see, that peak was going all the way back to the 19th of February. So about 1 month, well, less than 3 weeks away. During that time, 9.35% down to today's close. Now, what am I looking at here? One thing that I'm looking at is these long wicks that we have. Now, the body on this is actually kind of wider than what I would want. We'll talk about the NASDAQ 100. We'll talk about Russell 2000 through their ETFs next. However, this is still indecision between the bulls and the bears. The bears could not keep the price down all the way. The bulls could not push the price up all the way, but the bulls did give a little bit of a ground, closing just a little bit above the previous low from Monday. So today, that indecision coming in, maybe we've seen for the near term that peak fear moment and the market starts to relent. What else am I watching? The 200-day coming up this way. We are down below the 20. The 20 is down below the 50. Bearish signs, bearish slope that they're decreasing now. We have a flattening out of the 200-day, and we're below it. That's bearish territory for us. I will tell you, from a momentum standpoint, the RSI being down below 30, we are in oversold territory. It is time for us to see a bounce if we're going to get one from this point, or it's darn near time to see it. We don't stay, just look at, I'll reset this view so the chart stays consistent with us, but look at down here at the bottom of your screen, and let me make it a little bit bigger for you. Let's move volume up, and then we'll move RSI way up. So you can really see these exaggerated movements that we have almost down near 30. So almost oversold. And then the market, look at the chart up here. We got that rip upward from there. So if we go back even more, going back to April, we had a pretty decent rise after coming off of the low momentum wise, being once again down near 30. And so how much of a percent gain was that? Because that looks pretty small. Well, let's find out. So if we go to that day where we bottomed out for momentum, and then we go up to the top of that, we still had, I better do that one more time because I think I misclicked that one. Bottom to top, we had a 2.75% change. So almost 3% change coming off that bottom. A 3% day or 3% couple of days would certainly be welcome from where we're at right now. If we go back to hitting oversold back in October, this rip was huge that we see right here. So there's that bottom, and then it never really came back down until we got all the way up to, well, April in 2024. So coming off of that oversold territory, we tend to get rips almost immediately. So here we came down to almost oversold, still moved up with price. Oversold, moved way up in price. And so you guys get the idea for the pattern here. We don't stay in this territory very long. Down here where we went way oversold, this would be even more indication that we're most likely going to see a price rise coming sometime soon, even if it's just a little bit of a relief, even if it isn't a shift in market from bear to bull, for example, throughout 2022. And then if we go back to where we were at in early 2022, man, we dropped all the way down to an RSI of just below 25, which is fairly low when we talk about the S&P 500. And once again, we had a significant rally come off of that. So I think I've made the case, and you guys are welcome to look through if you have the charts to look and see what the RSI has to say from the daily chart. But my point is that we don't stay in those oversold territories or even down near oversold very long before having a bit of relief coming our way, even if it does follow with a further sell. I feel like that's where we're at right now, is that, man, we're down below 30. We're in that oversold territory. We might have some relief coming our way, at least in the near term, so we want to be watching. So if this is a place where we're going to find that relief, and I have a lot of technicals on here, bear with me. There we go, and I'll bring up the layer tool, and we'll hide some of that other stuff so it's not in our way for the moment. And let's get rid of that one. And then one more. That's the one that I want to do. There we go. So when we look at that, we could see that relief coming in. The 23.6 is all the way up at 566. So about 2%-ish, a little bit shy of it. That'd certainly be welcome. And just above that is the 38.2 at 575. If we indeed hit the bottom for right now, we want to be watching those retracement levels back up. And hopefully we would be able to get punched back through that 50% Fibonacci retracement level. That would certainly be very welcome from where we're at. So if we go out to the weekly chart, there we go. And I'm going to take down my technical so that you guys can see a little bit more of what I'm watching. We crossed down on a weekly basis, down in a bearish territory. We crossed down below the 50-week, and then we're sort of relying on some historic support in order to prop us up for right now. So you can see this little hiccup that we had over here in the market. That's about where we're at right now in that mixed up territory. But we could actually fall down quite a bit more from where we're at. So just be careful as you watch it from where we are to where we could potentially go. I really do think that right now what it's going to take is it's going to take a sentiment shift in order to really recover from where we're at right now. I've talked in previous videos about the 4 pillars. So GDP, inflation, monetary policy, and labor market. So to me, those are the 4 things that the market's really paying attention to for the pillars, meaning that they hold the market up, that they prop it up. And when we start to infringe on those, was I just raising the roof? When they start to infringe on those is when we start to see cracks come in. They are all interwoven, intermixed, that they don't, like one helps to support all the others. So if you have weakness in one of them, if cracks start to show in those pillars, we start to wonder, like, are we going to see a crumble? Because crumbling for one can collapse all of them. So we want to be watching out. Right now, GDP's got a huge question mark. People are nervous about it because last we saw it was fairly negative. I went on more about this in my other videos. You can go back and you watch those videos, especially this morning's video. It'll tell you more about it. But that does have implications on weakening what we see in the labor market. It can also reduce inflation, but for bad reasons, for recessionary reasons. If we see that we actually want reduced inflation because of economic strength and productivity gains, that allows us to be able to reduce that inflation because there's so much more supply happening, and that the consumers are keeping up pace with that buying enough that the businesses are able to continue to expand. And that once again circles back to GDP, and that also keeps up the labor market. In any case, I went on about for a long time about that in other videos, but just go back, watch those. I'll talk about it more in my upcoming videos as well. So if you subscribe, you'll hear more about that. Let's get back to the charts. So falling down below the 50-week, kind of painful, but big rallies come after touching that 50-week. So if we can get back up over top of it, that could be a moment where we start to see that rally really come into place. So be on the lookout for that. There's other times where we touch the 50, big rally. Touch the 50, big rally. Back here, if we go back even further, touch the 50, big rally. Now, we get an even bigger rally should we come back and we touch the 200-week on here. This is in the bottom, market bottom for December 2018. As soon as we touch that 200-week, look at the rip that took place. That, my friends, is a huge gain as we go through that. So that took us all the way up, 45% climb from that 200-week. I would say that's pretty good. Well, look where we punched down through it. If we move forward, that takes us into the pandemic where we crossed down through it. And man, that was painful. If we go to the monthly chart, this is really where you start to see a little bit more, so a little bit longer time frame. So not paying too much attention to too much minutia. So this 200 month, look at that rip that we went from October 2022 on up, coming down, retesting the 20 month, and then back up again. I get really excited about the monthly chart here. If we come down to any of these moving averages, that could be a place for a significant bounce from where we're at right now. For me, that would be something where I would take some near-term long options. And I can only speak for myself. I can't speak for you, to at least take care of those bounces that could happen very quickly and have the potential to have those outsized returns to me. And we might still fall off of that. We might not be able to make it back up over, much like over here where we came back and we peekabooed over the 20-day but couldn't keep it. So we returned back down to the 50. And off of that retest of the 50 from before, we found support there. The rip happened. So over here, pandemic, things shut down. We crossed down through it. But then the next month in April, crossed back up above it, closed up above the 20-week rip. So I'm excited for the potential. Should we get down to those levels, we can certainly ride those coattails. Watch for that sentiment shift to take place where those pillars are actually strengthening and finding evidence for further support for propping up the markets, because I think that's where we're going to see the big rallies come in. Moving over to the Qs, here's what I find exciting. We got a lot of volume. So the most volume so far has been these past two trading days. Out of all these volumes that came before it that were up above the moving average, we could be seeing signs that the bottom, at least temporarily, is in. And so that's pretty exciting. Now, what evidence do we have? Part of it is this indecision candle that we have right here where the bulls and the bears are fighting. So the bulls managed to push all that up and the bears squished it right back down. The bears were able to squish all the way down here. The bulls pushed it right back up. There's a big amount of contention happening right around the body of this candle. If tomorrow it's decided that we trade up here instead and we get through this resistance zone that's to the top side of this, that could be a good thing. So 477 up to 482, big old candle pushing back up above that. That'd be wild and wonderful. Watch for the 200-day that's up above. That could be real resistance for us. Down below, if we trade down below instead, we can watch for support, but that could also show that the bears have taken control and we lose some more. I got to say, after the amount of beatdown that we've gotten in the Qs, I think that it's time that we start to see a little bit of relief coming in. Who am I to say? I'm just reading the technicals that are on the charts. You guys can see the same things that I do. The momentum is down in oversold territory, and much like what we saw for SPY, tends not to stay there before recovering at least somewhat, even if it is going to sell off some more later. So pay attention to that. IWM, nearly the same thing when we look at the daily chart for this. There we go. Look at that narrow-bodied candle that we have. And a few things to be excited about. One, we still closed up above 200 for psychological support. If we go out to the weekly chart on this, there we go. We actually found support at the 200 week for the Russell 2000 stocks. We could see that near-term rally come in. If I put up my technicals on this, you can see the cup, you can see the handle, and we're at the bottom of that bear channel that makes that handle coming off of that. So staying up above that is a good thing. If we get further pressure in the markets, we can fall down through the bottom of that, and that can be extra bearish. We got to watch out. Cup and handle, absolutely not confirmed until we break up above the top of this handle. And if we do, we could have a 40% move if this technical plays out. This one is going to be extra sensitive to the four pillars that prop up the markets because it's small cap companies, and they have a tougher time in times when GDP is weak. That there's just not that much demand going through for products, services, you name it. And then also inflation tends to tax them a little bit extra hard because they don't have the cash. They're more reliant on debt. Makes it more expensive to have that debt, makes it more expensive to take on that debt. It's just not good things. So for the Russell 2000, this will be more sensitive. I do think if the sentiment shifts and if those pillars re-strengthen for us, if they re-gird themselves, we could see that push up higher. Right here it says no deeper, please. And that's because we don't want to see too much retracement for that handle because it makes it tougher to have that pattern actually be confirmed when we break out the top of that trend line. So 50% would be ideal. I would take on this one because of the support that we see down to the 618. And that's not a lot of movement. It's already fallen about 20% from its peak back here this most recent time. And I would absolutely love to see that rip take place. We could see a little bit of relief come off that, give us another 5 to 6% back up. And then, okay, are we going to break out of that? Once again, I think it's a sentiment thing. So let me summarize this thing. I do think that it's possible that we have some relief coming sometime soon in the markets where we breathe just a little bit easier. Maybe CPI is that catalyst that it comes in subdued. And then that means that it's a lower baseline for the tariff-based inflation to add to. Maybe Trump relents even more on those tariffs, and then the market's like, wee, and that pressure comes off, and that would be even better. So be on the lookout for what he's signaling. Is he just going to say more tariffs? I'm standing by what I said. That delay is the last delay. Or has he caused enough pressure to get things moving across the globe in order to get people to actually be paying a little bit more and actually come down to a compromising state? So him taking a hard stance and polarizing with the other one, maybe then compromise comes in the middle, and that's where we see that rally come in. We'll have to watch and see. We don't exactly know how it's going to play out. I think we start off with inflation tomorrow with CPI, then PPI the day after that, Michigan consumer sentiment on Friday. I think that's going to be huge. Guys, you can talk with me at length about this in the Discord. Links in the description, code word cash. Save 50% on that first month. Join the thousands of members who are already over there and absolutely loving everything that community has to offer. The community itself, the trades that are out there, the Trade Win channel that's also out there as well, the expert panelists, the live trading led by Stockmo, you name it. Expert of the week happens to be me this week, and I'm pretty darn pleased, excited, and grateful to be chosen for such an honor for that. And if you guys want to learn more about technical analysis trading and options trading, there's courses for that. Links in the description as well. Use code word DOCTOR when you sign up with that. It's going to save you a ton of cash there as well. Guys, thanks for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.